Welcome everybody, this is Mike Hamilton from Trade the Easy Way, talking to you at 5:30 p.m. UK time and 12:30 New York time. So let's take a look at this market on Monday the 3rd of November. And so I've got the Nasdaq ratios, fib ratios from the September lows to the October highs. So we're a sweeping pullback to halfway to that range, which got bought. So we took a while to come out of here, closed, broke above that previous high, went to the extension, and pulled back to that extension. So as long as we don't close underneath 25.5, 25,800 is the actual level. I've got a gap down there. At some stage that gap can be filled. In the past, gaps were filled quite quickly. Now we're dominated by algos. They tend to take weeks and months at times. So if this Nasdaq closed under 25.5, hold on to your hats, because then we could get a fairly swift pullback. If we continue to stay above this 25.5, 25,800, then we are going to 26.6 next, and potentially back end of the year 27,000 plus. Alright, so there is still no reason to sell this market. A couple of deep lower closes, but we are holding on. Interesting to note that the 50-day average, this average coming up, this blue line coming along here, is pointing up, but there is a gap. Whenever there's a gap to the 50-day average, we tend to go and find it. Sometimes we don't touch it, sometimes we go underneath it, but as long as we ultimately turn around and hold it, then this market can stay up. So just concerned that we are some way off that market, off that 50-day average, but like I said, if that holds up, then we're at least going to 26.6. Alright, a quick look at the FTSE. I've ranged this slightly differently. This is ranged from the highs and lows of the first half of the year on the FTSE. So here in June we hit that high, stumbled back to the 50-day average, and then went on a really nice run. And every time we've held the 50-day average here, we've pushed higher. Now we are extended, and we're at 9,800 is a tough spot, so I would expect that to come down to at least around about the 95 mark. We're 97 at the moment. However, if we turn around and close above 98, we're going to go and find that 10,000. Alright, so the relative strength index is coming off an extreme. So if we can sit back, come back to the mid-range, 50-day average will catch up and hold, then we can take another leg up. But in the meantime, be careful. Quick look at the dollar. So dollar has had this double bottom, a nice basing pattern around here, and now we are potentially, so we've broken out of here. If we pull back to this trend line and hold, we're going to go and find the very early summer highs up here. Alright, so the dollar is potentially picking up. However, close under this 99, 92, and then we will come back and find those lows. But my prediction is, the US is stronger than its counterpart, so I would expect to see that recover, and could so easily go all the way back to 102, 103 plus. Okay, so around these levels. So that actually works in my favour for wheat. Been talking about wheat on and off for a very long time, tracking all these moves, The crucial thing with wheat down here is there's 3 touches of that trend line. Now, if you know me well, you will know that I'm about to tell you that if we breach that trend line, as long as we close immediately above it within the next 24-48 hours, which we did here on the wheat on the 14th, 15th, 16th of October, then the chances and the probabilities of that pushing higher is very good. This recent low has pinged back to test that trend line low, which is again healthy. Let me get the pen. So we broke up here, pulled back to the trend line, and now we've gone and found $5.55. This is, you can see there's a tough spot here, and we are getting extended. But look at the volume spike. If you've got to follow through with high volume, then that's extremely bullish. So if we could wiggle around, I would expect that to go and find $6. Long term, I would expect that to go to up here to $7.90, $8.70, and very long term, $10 plus. But I'm talking weeks and months, not. I'm not expecting this to fire up and charge up there unless there's something really incredible news that would do that, as did the Ukraine war. So the Ukraine war did this. So that's the outbreak of the Ukraine war. Ukraine is the wheat basket of Europe. So we saw this solid pattern, broke out very quickly. I mean, it got way out of whack. Volumes were good, but not enough to sustain that. And then subsequent highs were sold into. Gold, I have been a buyer of these dips. So reconnect to the 50-day average. It's the mother of all moving averages. Any market that can sustain their price above the 50-day average is a bull market, and of course any market that can't hold the 50-day average is a bear market. So we hit 43.85, came all the way down to about 38.40, 30.50, and so we've recently tested 440, 450. These pullbacks I still think are bought, and I would at least expect that to go and see 41.75. If we do a full recovery, I expect it to struggle around the 43.85 and ultimately go to 46 and 5,000. Alright, so a lovely sweeping move, nice healthy pullback. Volumes beginning to come back, so we got very overbought here. Went back to the midway in the relative strength index, and now we are pushing up. Alright, so I would look out for any moves around the 4,000 mark. Get your stop out of trouble if you want to get in this, if you want to participate, and see if that can march back up. Right, let's look at some stocks. SSP Group. I may have got back into this a little early, so I did buy around here, took it off on that spike higher into resistance, and just recently got back in around about the 153 mark. It could, at the moment, it looks as if we may go and see 145 again, but I'm not leveraged, so I got my stop underneath here. If we can turn around in the next day or two back above 155, then I think we can expect to see this wind back up. 190, £2 mark, that will be the sort of initial target. Very long term, I think this can do £253, but you're going to have to be patient to achieve that. POLR, talked about this some months back, earlier this year. 322. We've just tested 585. Looks if we can go and see £6 plus at the moment. Very neat pullback to 440 back in early September. So only pullback. If you want in on this, and I think there's still plenty of time, then see if we go and test 550. EasyJet, so we did a full move back to 445, recently up there above £5. This is holding all the support levels. We've got a gap up there at 585. So all the time this holds down here, and if we can, and ultimately volume increases, and we had a volume spike today in fact. I think we're capable of going back to £6. If this runs longer term, then we can see 645, 650, £7 if it runs. It's got a lot of congestion above it now, but at the moment all these pullbacks are getting bought, the ambush zone held, so if we continue to see high highs, then that could move. I've been in and out of this one. I'm going to move on to US stocks in a minute. So all the UK stocks we talked about recently, Prudential, Sabre, Tate and Lyle, all of them are holding up. CRE is taking a bit of a dip. Advanced Medical Solutions is moving up. BT is holding 180. I'd like to get back into BT. Talk about that next time round. But moving on to US stocks at long last. I bought back into this on Friday, so taking a little bit of heat, not much. I've been in and out of this. Bought down here, sold at resistance. Bought down here, sold at resistance. This is a Ethereum miner in the US. So if we can get back above 45, then I think, and we can really see some decent volume, then I think we could get back to 72.83 and potentially back to the 10 mark. Alright, but we've got to start to close higher, start to see an increase in volume. Otherwise, I've got a very small position at the moment, so the heat I'm taking is minimal. However, I will add if we get above 45.5. So that's BMNR. International paper. Thanks for drawing this one to my attention. Let me just measure this one up. Yeah, we're right on an extension. They actually had reasonable volume on Friday. Looked like it might pick up on Friday. I would sit tight. If we close above that 30 mark, i.e. Friday's high, and we see an increase in volume, I would be into that. What else? I'll tell you what else will get me involved in this one. This is international paper, IPC in the UK. If we dip under 28 but then subsequently close above 28, that will get me in. But all the time we're just closing lower and volume is pathetic. I'm just going to steer clear. But this I think is a good watch. I don't know what's happened. KMB, Kimberly Clark, this has had a horrendous gap down. Let's have a look at this one. So take that high and these lows over here on the left, which is November 23. So I think there's a decent chance they could come and find 99.5. But I will watch that with you. So with a massive gap like that, I mean on Friday we closed at 11,972 and here we are at 10 103.63. So steer clear. Must be a story on that. Steer clear for the moment, but I will watch it with you. This is into perfumes. I think this was listed on the US as well, but this appears to be the European market. Let's take a look at this one. So the most recent high was up there at 35.75. So this is interesting because we had a big spike up here on 15th of October, and all we've done in this recent drop is to roll back into that breakout area. So a huge buy signal here. So I would give this one more day. If this closes above 28.29, ideally, if you're really patient, I would wait for that to close above 29.50. I would get in because I do like the fact that, I mean, if you get in now, yeah, just make sure your stop's under 27 because we could so easily just come back to 27. Quite often when you get a big breakout, they do a full boomerang retest. However, if this is going to be a higher low, we start closing above this 29.50, then I think the chances of that recovering and breaking that line and pushing back into 35 plus is high. But I think patience is the name of the game for this one, and I will give it more time and just wait and see if we can get above that 29.50. Okay. I'll leave it there for now, but just a word of caution, because the US stocks are very, very expensive at the moment. The earnings ratios are, on some are astronomical. Some of the AI stocks are in bubble territory, and this can be a volatile time of the year. So just be cautious. I would still engage this market, but just protect your capital and make sure you are monitoring these at least once a day and reacting if something does not go your way. Don't sit in a loss and see it get worse. Alright, thanks a lot, and keep your comments coming. Just let me know what you're looking at, let me know what you're thinking about, let me know what you're in, and any other questions would be useful. Alright, thanks very much.